I've been in the business for over 30 years. I have an interesting genesis. I was a floor trader for Dean Witter back in the early 90s. In the mid 90s, that's when Dean Witter was the largest futures clearing firm in the world. And they cleared some of the best hedge fund managers at the time. At the time, they weren't that famous, but today they are. This is names like George Soros and Paul Tudor Jones. And when I was with them trading Japanese yen futures, British pound, I really got hooked on the world of good risk management. And that meant, well, what does that mean? Well, it's good risk-adjusted returns, capturing some of the upside but mitigating the downside. And those managers at the time were way ahead of the curve. And what I realized is that those managers were really only accessible to some of the biggest endowments and pensions in the world. And so my career started to say, well, how do we democratize access to these great strategies? And myself and my former business partners, we launched a firm called Altegris, which stood for Alternatives, Integrity, and Risk Management. And we became the first independent alternatives platform in the country back in 2002. And as time went on, eventually iCapital acquired Altegris, which is a crazy small world story. But I've taken that idea of democratizing access to institutional quality managers to democratizing access to institutional wealth management. And when the reason that came about was in the early days of before I launched AlphaCore, is I realized there were some great wealth advisors out there that were good at doing fundamental financial planning, kind of 101, where they gather your information, they look at your trust, your estate, do you have a 529, and look at cash flows. And myself, after we had sold Altegris, I had gone through a liquidity event. And so I sat down with them and with myself and my wife and 3 kids, and they said, okay, well, now that we've gathered your information, as long as you can make between 8 and 12% return per year, you won't run out of money. And then when I asked them, well, how do you make 8 to 12% a year? They said, well, we'll put 60% of your money in equities and 40% in bonds. And for me, ironically, this is 2014, I thought that was too risky. And they were, what do you mean? You're from the world of alts. I'm like, yeah, well, alternatives can provide diversification. So I literally sat down with my wife, and this is the origin story of the name, and I drew a circle on a page, and I said, okay, in the center of our portfolio, we'll put diversified alpha generators. So we'll put long-short equity, global macro, multi-strat, private equity, private credit, private real estate. Not one manager, one style. We'll have a diversified core, and that may be anywhere between 20 and 40% of our portfolio. And the remainder of that will be long-only beta. So long-only equities, long-only fixed income, international US, because we still believe in the creativity of equities. And that will be low-cost beta, and we'll have alpha in the center. And so when I drew this out for my wife, she said, well, you should name your firm AlphaCore. And that's the origin of the name. And as we started to build, we were the first clients of AlphaCore. And then I said, okay, well, I want to have everything that a ultra net worth family wants. And I want great research. I want great investment management, but I also want that supplemented with great wealth planning. So high-end estate planning, high-end tax planning, and tax prep. And that's how we've gotten to where we are today.